Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly support and demand area. In fact, from here, all this previous rejection to the upside was created. The market then broke below the zone. Here, the market found again support and rejected back above this level. And now the market is testing this same exact zone. Now, if you are identifying in this pattern an inverted head and shoulders, you would be correct, because in a situation like this, we do have the left shoulder here, the head here, and the possibility of creating this right shoulder at this area, and the market from here continuing higher. Now, the creation of an inverted head and shoulders is essentially, if you want to put it simply, is a fake breakout, after which you have an impulse and correction, because after the fake breakout, you essentially have the impulse and then the correction. And generally speaking, after an impulse and correction, you would anyway expect more bullish continuation, because that is the definition of an uptrend, a series of higher highs and higher lows, in which every time you're getting some impulses and corrections. Now, another important aspect is that if you have an impulse and you want to measure the correction, you also have to take your Fibonacci from the low to the high of the impulse leg. And in a situation like this, it is clear how the Fibonacci level that is aligning the best with this structure level is the 0.618. So you have the 0.618 lining up with the previous level of support and demand, also creating a potential inverted head and shoulders, all at the same area. This actually means that you have confluence of support inside of this zone. And when you have a confluence of support area, you would expect more institutional longing to be happening inside of that zone, further increasing the probabilities of a potential push higher away from the area. And we will be speaking more about institutional longing later on in the video. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, also here it is quite clear how this area is quite important structure. This zone was acting as previous resistance here, turned support here, and is currently still acting as support. Now, in a situation like this, we could expect a potential rejection to the upside to be created away from this area, creating a double bottom at this zone. So also here on the weekly, everything seems quite bullish, and we could expect a potential rejection higher away from this zone. Dropping down on the daily time frame, what do we see? Well, in a situation like this, the situation is quite clear, but at the same time is clear because we have a lot of structure that we have to identify. First of all, this area here is the level of previous daily resistance that was turned support here, which is now again acting as resistance here. At the same exact time, we also have support at this level here. In fact, here below, we can notice how this level of previous support has now been rejected to the upside. The market went for the retest of it, and again, the market found support at this level. So actually what we have at the moment is a market which is bounded from a daily perspective in between this resistance and support. However, let's keep in mind that on the monthly and weekly, everything seems quite bullish. And in the market, the best probabilities come when the monthly, weekly, and daily timeframes are all showing the same direction. Now, in this case, that would happen if we get a break above this high. In fact, if we get a break back above, this previous level of resistance that was turned support here, that is now again acting as resistance, would once again be acting as support here. So if we get the break on the retest of the previous resistance turned support, this is where we have the area inside of which we have good probabilities of getting a potential rejection to the upside. Now, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, first of all, if we're looking at the data for the AUD, we already have to keep in mind that we're looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last report, net positions once again started increasing. We went from having minus 81.8k net positions up to minus 71.1k net positions. So net positioning is starting once again to getting increased, with institutions adding 540 longs and closing 2.1k shorts. So institutions have now started adding longs and closing shorts on AUDUSD, therefore making it stronger. Now, if we get a break above this resistance, that at that point would become support, on the retest of the previous resistance turned support, there is definitely the possibility to see even more institutional longing, which at that point would further increase the probabilities of a potential push higher away from the level. And by the way, if you still haven't, make sure to join my free Telegram channel so you never miss new updates. The link is also in the description. Now, back to the analysis. As I was saying, if we get the break and retest, this is where we have good probability of getting more institutional longing, at that point potentially fueling a rejection to the upside. So if we get this break and retest, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.